So good evening to everyone once again. We are on a Friday evening. Yes, we have shifted our evening classes to Friday now, 9 o'clock. This will help us to evaluate the market conditions on a close of week basis. So going forward, our Monday, Wednesdays classes will be in the morning, 9 o'clock in the morning, and Friday, 9 o'clock in the evening. I also welcome the new joinees to our program. In these evening sessions, before we go on to discussing your specific doubts and trades, first we take some time out and talk about the markets. So let's talk about the Nifty. And a top-down approach starting from the monthly chart does not change much. We continue to bounce back from this Fibonacci retracement cluster, and we maintain that the sub 7 and the sub 8K and then the sub 7K levels are panic lows to be bought into. This is the channel that the index is trading within, and from the top of the channel it has reached the bottom of the channel in just no time. So it's essentially buying time and trying to stay above the channel border. Weekly charts, we have a bounce back where we can see that the index tried to test the psychological 10K mark, went very close to it, but then came off quite sharply. And we don't have, at least I do not have, a significant amount of clarity coming from the weekly charts right now. Clearly, a bounce back after a sharp sell-off, and it can give us follow-through weakness again, which I think brings us to the daily chart. Now, the start of May, or the month of May so far, I would say has been full of not only volatility, but gaps. Gap up, gap down. So if you focus on this daily chart, we had a big gap up on the last day of April, and everything looked very nice until the next day morning, Monday morning, we opened with a big 500-point gap down. And after that, we had gap downs, gap ups, and gap downs. Essentially, what I'm trying to explain or share with you is the times are difficult. The index is in no mood to give a follow-through run on the upside or a follow-through move on the downside. Recently, if you have noticed over the last 4 days, close to the lows of the 9K and 9050, the emergence of long lower shadows means it's not wanting or willing to give away. So on the downside, the 9050 stays as the level. On the upside, this gap down, if we zoom in and I do this Control Y, we can see these red lines. This is the tested gap. This is a fresh gap. So from a very short-term perspective, the index needs to take out Thursday's high, then Wednesday's high, and it's got some serious resistances on the upside. According to the tools that we use, the trend is definitely down. We had a bounce back. We were looking at a cluster of 99, close to that 99.70, where the index went as close as 98.89. So we were shy by close to 80-90 points. But these are difficult times. If you've been trading in the month of May and you're doing okay, not drastically bad, then I'll say that you're doing pretty good, because these kind of volatility, especially for a positional trader, is very difficult. In terms of levels, the psychological 9K and a little above that, 9050. Short-term levels can emerge further up if I take you to the 75-minute time frame. So you can clearly see that the index needs to take out these gaps. And it's not going to be easy. On the contrary, if 9K breaks, this is where you see a beautiful rising gap has acted as source of support multiple times. So we are kind of stuck between the resistance and supports, and they're not far off. They're quite close to each other. And this kind of volatility or this kind of tough time when it comes to trading and making money out of the market will definitely stay. I would say we should learn to live with this. Like most of the people are nowadays saying that we should learn to live with the virus. I would say this month at least we should learn to live with this volatility. In terms, before I go to Bank Nifty and some other sectors, in terms of the view on the Nifty, if I bring back our indicators, which helps us to evaluate the trend, the volatility, the momentum, the trend is down. The momentum has improved, but it's not given a follow through. It's actually now slipping off. I would say the index is kind of this 9050, 9000, these kind of levels. For the index is kind of a make or break, because if it falls below that, I sense it can fall sharply. The falls can be sharp. I think the bounce back can take a little longer time, because the main stock which led the move is tired. I'm talking about Reliance Industries. So I am cautiously bearish on the market. The cautiousness will move away and it will be bearish sub 9050, 9000 level. On the upside, let's take out the first Thursday high, which is 9280, let's say 9300 and 9600. So there are staggered moves on the upside for the index. So cautiously bearish is my stance as of now. Let's look at Bank Nifty. And we do see similar kind of a behavior, but Bank Nifty has not performed as much as Nifty has, and we've been repetitive about this, saying that it was mainly because of Reliance Industries. So same story emerges here also, where if you look at the weekly chart, we've got a bounce back, and after that the index essentially is coming off. And this is very much likely from the daily charts also. It can follow through on the downside, more likely. On the upside, the levels for the Bank Nifty is clearly the 20K mark, above which only there's some possibility of some movement. Cautiously bearish here also. If we look at the performance of the sectors from a 1 week and a 2 week perspective, what we see, if we saw it in terms of a weekly performance, we see auto, metal, media, real estate, mid cap, PSU bank, small cap, and this is where your Nifty is down 1.3%. So these were all the sectors which have started to move late. If you look at the other end of the spectrum, you have the pharma, which of course moved first. To some extent, private sector banks, few of them did move well at the beginning, and a bit of IT. Now these are the other end of Nifty. This is where your Nifty is. And these all sectors have underperformed the Nifty. Now, pharma is going to be extremely interesting for the week ahead, if not couple of weeks. Private banks completely mixed up, ICICI Bank, HDFC Bank, all over the place. But if the movement comes, it's going to come from them. There's no doubt about it. So you cannot ignore them. I'm not too very bullish on the auto, metal, media, real estate, this space, not doing much. Honestly, I'll rather focus on IT, private sector banks, and pharma for the week ahead. And I'll talk tonight a bit about pharma. Well, the reason clearly is the outperformance which pharma gave us. And now after this move, it is slowing down. In fact, this behavior of the Nifty pharma is very similar to a head and shoulder top. And this kind of a pattern, it's breaking down, can give us a nice possibility of a trap. The market will expect that the index should ideally fall close down to these kind of levels. But I seriously have my doubts and inhibitions, because as per our strategies, we are getting a nice low momentum buy setup. You remember last week we have been talking about Sun Pharma, Lupin, and we did trade it. Let me quickly run this 1 week and 2 week scan on the pharma stocks. There you go. And if I show you Sun Pharma, you remember we did trade this bounce back. We did trade this Lupin bounce back. And I was mentioning in our morning classes that how all of them are clearly showing the head and shoulder top, beautiful patterns. When it becomes so obvious, so evident, so clear, the chances of it going the other way around is very, very high. This is my general observation. So going forward, I will be keeping a close eye on Sun Pharma and Lupin, of course, but it's the other stocks which caught my attention this week, especially yesterday. Cadila Health and it was Glenmark. There you go. These stocks are trying its best to break out. In fact, Glenmark and Cadila, both of them gave a good breakout yesterday. It was Thursday. So we are looking at stocks within the same sector, which are giving us a breakout. And let me erase this. And I feel that going forward, especially stocks like Sun Pharma, Oro Pharma, Glenmark, Lupin, and Cadila are the ones that you should keep an eye on. Also, don't forget EV's Lab. This view is a contra view in the sense that the index and few large cap stocks are showing signs of classical bearishness, but this classical bearishness is coming in a relatively outperforming sector, and they are high candidates, high probability candidates for a bounce back coming week, which will, I think, support the index. Add to this few consumption story, few pharma FMCG stocks also, but it's essentially pharma that I'll be keeping a close watch at. Report designer, and if I take you to consumption, consumer durables, then in this space we have all gainers this week, starting with Bata, Titan, Voltas, and Havells, of which Bata definitely stands out. In fact, it was a 75-minute aim and shoot setup today. But pharma followed by consumer durables and FMCG is something you would like to see. I don't like few of these consumer stories because if you look at the chart, they have been creating wonderful rising wedge in a falling market. So they generally work as very good continuation patterns. Agreed, possible. That's why I'm putting my, sticking my neck out and would keep a close watch on pharma. I will end the market analysis by looking at Reliance Industries, because how can we ignore the heaviest stock in your market in a situation where everything is down and the heaviest stock in your exchange hits almost a life high. I don't know whether to call this a bear market or not, but so it is. Short-term correction after the move, it's healthy. Everything is intact according to our rules that we follow. It's going to give you a buy trigger. Candlestick traders will clearly see a bullish Rami pattern, and PhDs have taken a shape. You've got signs of almost an aim and shoot if you just ignore a few decimal points here and there. So you've got a buy setup on Reliance also for Monday. In our Monday's class, we will talk about this at length, but pharmaceuticals, Reliance, I think will continue to play its part. All right, so I'll wrap up our Friday's analysis by saying that going forward for the next week, we are cautiously bearish. We sense that the market will definitely stay volatile, unpredictable. And in this kind of times, I think this month we are going to focus on protecting our profits, protecting our capital, and not try to make a lot of money, because once we get a trend, we can make up. 1 month will make up for 3 months of tough times. So show some patience and don't haste to trade in this kind of conditions for sure. 9,9050 for the Nifty are the levels on the downside. It's got multiple resistances on the upside, so we'll take it case by case, day by day basis next week. Pharmaceutical stocks can give us a bounce back, likes of Sun Pharma, Lupin, Dr. Reddy DVs, and then little lighter ones like Cadila and Glenmark. And then Reliance may be a good counter for Monday above today's high, which was 1466. So that's it. Let's talk about our trades then. Please ask your doubts and questions.